Good evening. Tonight we stand at the threshold of a new era, one that will reshape the world as we know it. January 6, 2026 marks a turning point in modern history. The date will be remembered as the moment when the global order, long taken for granted, began to unravel in earnest. The economic order that shaped our world for decades is fracturing, sending shockwaves through every continent and every industry. Last August, China withdrew from a major trade agreement with the US. A move that sent global markets into turmoil and left investors scrambling for answers. This wasn't a minor dispute, it was a declaration that US-centric globalization is ending. The world's economic center of gravity is shifting, and the rules of the game are being rewritten. The impact reaches far beyond politics. It's about your job, your bills, and the balance of global power. Ordinary people are already feeling the effects, from rising prices at the grocery store to uncertainty in the workplace. China's decision is the most significant escalation in a decade-long trade conflict. What began as a series of tariffs and countermeasures has now become a full-blown economic standoff. The world's two largest economies are now on diverging paths, each forging ahead with their own vision for the future. Economic interdependence was supposed to prevent this, binding nations together in mutual prosperity. But here we are, watching old alliances dissolve and new rivalries emerge. China is building a new economic bloc with the global South, forging partnerships that bypass traditional Western power structures. Meanwhile, the US doubles down on protectionism, seeking to shield its industries from foreign competition. Global supply chains are being rerouted, alliances redrawn, and the post-Cold War order is under threat. The world map is being redrawn, not just by politicians, but by the flow of goods, data, and capital. This is the quiet start of a new chapter, one defined by competition, not cooperation. Factories sit idle, boardrooms are silent, and uncertainty hangs in the air. We're witnessing a strategic uncoupling. China is insulating itself from US pressure, building an alternative system of technology, finance, and trade that could one day rival the West. US policies, meant to contain China, may have accelerated this shift, pushing both nations further apart and forcing the rest of the world to choose sides. Now, a new world is taking shape before our eyes. Old alliances are fading, and new power blocks are emerging, each vying for influence in a rapidly changing landscape. The question is no longer if the world will change, but how, and who will be left standing when the dust settles. The choices made in the coming months will shape the next generation and the world they inherit. To understand this rupture, we must look back. The story of the US-China trade war is not just about tariffs and numbers. It's about decades of growing tension, shifting power, and clashing economic visions. For years, the two countries were deeply intertwined, their economies fueling each other's growth, even as suspicions simmered beneath the surface. It began in earnest in 2018, when the US imposed sweeping tariffs on Chinese goods, citing intellectual property theft and trade deficits. This marked a turning point as the US sought to rebalance a relationship it saw as increasingly unfair. Beijing retaliated with its own tariffs, targeting key American exports. The response was swift and calculated, signaling that China would not back down easily. The tit-for-tat created uncertainty for businesses and farmers on both sides. American manufacturers faced rising costs, while Chinese exporters scrambled to find new markets. Farmers watched their crops pile up, unable to sell to their biggest customer. In 2019, the US accused China of currency manipulation, deepening mistrust. The financial world took notice, as currency values became another battleground in the growing conflict. The conflict soon shifted to technology. The US cut off China's access to advanced tech, aiming to slow its rise. Semiconductors, software, and next-generation networks became new flashpoints, with both sides racing to secure their own supply chains. Beijing saw this as an attempt to cripple its future. Chinese leaders warned of a new era of self-reliance, vowing to invest heavily in homegrown innovation. These policies only intensified, becoming a rare point of bipartisan agreement in Washington. Lawmakers from both parties united, determined to confront what they saw as a strategic threat. New tariffs and restrictions kept piling up, walling off the two economies. The barriers grew higher, and the flow of goods and ideas slowed. Hopes for a truce faded, confrontation became the norm. Negotiations stalled, and trust eroded with each new announcement. The relationship settled into a pattern of escalation. Each side waited for the other to blink, but neither did. Each new measure added another brick to the wall. The divide grew more visible, and the world watched as the two giants drifted further apart. The stage was set for the dramatic break we saw last year. The consequences rippled through global markets, affecting industries and consumers everywhere. The trade war was no longer a threat. It was reality. The long road had led to a new era, one defined by rivalry, uncertainty, and a world forever changed by the clash of two economic superpowers. The decisive moment came in August 2025. After months of escalating U.S. restrictions, Beijing withdrew from the trade agreement. China cited relentless American protectionism as the reason. Beijing framed its move as a necessary response to a partner who had abandoned free and fair trade. A new executive order from Washington, expanding tariffs and tech controls, was the final straw. For China, staying in a US-dominated system was now more costly than leaving. The agreement was already meaningless. China was ready to walk away. The withdrawal was calculated, signaling China's confidence in its alternative partnerships. By then, the trade war had cost both economies hundreds of billions and forced a global supply chain realignment. The breaking point had been reached. China's exit wasn't just an end, it was a pivot to a new era. As the world watched, Beijing quietly began to chart a new course, one that would reach far beyond its own borders and ambitions. For years, Beijing has been building ties with the global south, but since 2023, the effort has accelerated. China's leaders have made it clear, they see the developing world as the key to their future influence and prosperity. China is lowering trade barriers for Asia, Africa, and Latin America, creating a vast economic ecosystem centered on Beijing. New trade agreements and special economic zones are drawing these regions ever closer to China's orbit. Chinese trade with developing nations has more than doubled since 2015, while U.S. growth has lagged. The numbers tell a story of shifting power and deepening economic ties. Chinese investment has quadrupled, often with fewer conditions than Western aid. This approach appeals to governments eager for rapid development without strings attached. For many countries, fast, unconditional capital for infrastructure is irresistible. Roads, railways, ports, and power plants are transforming entire economies, almost overnight. Entire supply chains are relocating, creating deep dependencies on China. From raw materials to finished products, the world's manufacturing backbone is being rewired. China sets the standards, controls infrastructure, and reaps the benefits. Its technology, rules, and expertise are now embedded in the arteries of global commerce. The U.S. risks being left out. As new trade routes and alliances form, America's traditional dominance is being challenged in ways not seen for decades. China excels at producing affordable goods for the rising global middle class. Its factories churn out everything from basic necessities to cutting-edge technology, making Chinese products ubiquitous. From smartphones to solar panels, China is becoming the indispensable supplier for most of the world. Its reach extends into nearly every home and business on the planet. This is a patient long-term plan to reshape the global economy, one that is already changing the balance of power and will define the next era of globalization. The effects of this economic split are already hitting consumers. The most immediate impact, inflation. Tariffs and disrupted supply chains mean higher prices for electronics, clothing, and groceries. The era of cheap, abundant goods may be over. Companies are scrambling to reshore or friend-shore production, a slow and costly process. This leads to shortages, quality issues, and slower growth. Entire industries and communities built on US-China trade now face uncertainty. Farmers and factory workers on both sides are losing jobs. Economic dislocation fuels instability and nationalism. Economists warn that protectionism risks a cycle of retaliation and global slowdown. When nations build walls, everyone pays the price. The US-China economic split is redrawing the geopolitical map. As China deepens ties with developing nations, it gains political leverage. US financial dominance is eroding as more countries join China's economic ecosystem. Nations less reliant on Washington are harder to pressure with sanctions. The world is becoming more multipolar and more fragmented. Countries are caught between US security alliances and Chinese economic ties. Many are forced to choose sides or walk a tightrope. The old, non-aligned movement may return as nations seek a middle path. Competing blocs are emerging, each with its own rules and standards. One bloc centers on US values, the other on China's state-led model. The friction between these systems could define the century. The world is less predictable, less cooperative, and more prone to conflict. The US-China rivalry is reshaping global energy markets. China, now the world's largest oil importer, can redirect global energy flows. Its partnership with Russia, especially after Western sanctions, has major consequences. China's purchases of Russian oil have given Moscow an economic lifeline. OPEC Plus production cuts have driven up prices, straining U.S. relations with energy partners. The U.S. has less leverage after drawing down its oil reserves. The global energy system is more complex and politically fraught. The transition away from fossil fuels is slow, so competition for resources is fierce. China is locking in long-term energy deals, securing its future. Price volatility can trigger recessions and unrest. The battle for energy will shape alliances and global security for decades. Experts warn of the long-term risks of this US-China split. John Alterman says US efforts to isolate China have instead fueled a rival economic bloc. Tariffs are pushing countries toward China, accelerating its integration with the developing world. Zongyuan Zoe Liu notes the US leads in high-end innovation, but China dominates affordable goods for most nations. China is becoming indispensable to the global middle and lower tiers. Carolyn Kassane warns that a fragmented energy system increases complexity and risk. She urges nations to build resilient energy systems to weather future shocks. Economists agree protectionism is harmful, as history shows. The Smoot-Hawley Tariff Act is a cautionary tale of how trade wars deepen downturns. The consensus: free trade is still the best path to prosperity. Where do we go from here? The future is uncertain. Decisions in Washington and Beijing will shape the world for generations. The US must rethink its strategy to compete with China's state-led model. Watch for new trade blocs and diverging tech standards, signs of a deeper fracture. Companies and individuals must adapt to a world where old rules no longer apply. The temptation to escalate is strong, but it risks global slowdown and conflict. Leaders must find areas for cooperation, even as competition intensifies. The challenge is to balance rivalry with collaboration on global issues. The story is still unfolding, and everyone has a stake in the outcome. Thank you for watching.